welcome to the F&O show. This is Mishra, and of course you're watching NDTV Profit. It's a show where we take stock of the derivative markets. Let's look at the markets first and show you what's happening. So Nifty IT has sulked. Everything else seems to be okay. So IT about 3% lower now. This is a dramatic pullback for the IT space in the session today, and thwarting that is what banks are doing. So some bit of outperformance from banks, I think about 0.5% or there for the Nifty Bank. And if you just look at the points contribution first before we talk about anything else, you will see what I'm talking about, because Infi, TCS, HCL Tech, Tech Mahindra, that forms the bulk of sale. Thwarting that, as I said, HDFC Bank, Bajaj Finance, Larsen & Toubro and Reliance. But banks are able to put their foot forward and try and combat some of the pressures. And it's admirable that despite the Nifty IT being down 3%, the index is trading absolutely flat. We should also get a list of the BSE 500 winners and losers, because that will give you a story of what's happening at the broader end of the spectrum. It's a flattish kind of a performance, as you can see, about 36 points lower. But chemicals seem to be making a comeback. Alkyl Organics, Balaji Amines. So that set of stocks have done very well. There is strength in HEG and Paytm as well. On the weak side, again, most IT names, including a Persistent, Zensar and Emphasis, sulking in trade. Some bit of pressure on Heidelberg Cement and Blue Dart too in the session today. So that's the long and short of what's happening in the market. Now, let me get in our experts to try and talk about what should you do as far as the markets go. Are there any derivative trades that can be taken as well? I think let's bring in Ajit Mishra of Religare Broking, as well as Brijesh Singh of Opulent Investment Advisors. Gentlemen, both of you, thank you so much for taking the time out and being with us today. Ajit, rather. Sorry, I asked this Brijesh. Ajit, sorry. Good morning to you. Are you avoiding the index, or are you taking some specific trades there?
Yeah, good morning, Neeraj. So, Neeraj, I feel that it's prudent to avoid any fresh position, because it's been almost 4 days now that we have been trading in a very tight range. The good part is that we have not seen any major price damage in this during consolidation, so it's more of like a time-wise correction that we are seeing in the markets. The tone looks positive, but the upside seems capped in the current levels, because 25,550 is what we are eyeing as a immediate target for the index. And we are very closer to the mark. So not the current level. In case if we get any intraday toward 25,300 zone, then one can look for a buying position through option strategies by buying 25,300 call and shorting 25,500 at 600 call and creating a bull spread instead of going naked long in this event. Banking and financial services are leading from the front, but at the same time, IT is putting pressure at the higher end. So I feel it's going to be a limited upside from the current levels is what the indications we have. So for banking, obviously, because we are closer to the resistance, I would prefer to avoid any fresh trade in banking at least.
So Ajit, what's the bull call spread? You mentioned that. Which index and what's the nature of that strategy? Could you explain that to us?
Yeah, so Neeraj, we are currently quoting at 25,429, and in case if intraday we get any dip towards 25,300, around that area you should look to buy 25,300 call for the current expiry and short 25,600 call. Otherwise, considering that we have limited upside around 125, we are away from the 25,550. The risk reward is not favorable for the traders.
Okay, viewers, you can click. I wonder, Ajit, if your thought is different on IT.
No, it is largely in sync with what Brijesh have shared, because especially for the IT majors, I don't see any major reason of witnessing any major correction, though there is a bit of anxiety, I guess, ahead of the US Fed, and that's the reason why we are seeing this downtick. But I feel it's an opportunity to those who are sitting on the sidelines and waiting for any significant dip, and that is what we are getting today. But I still feel that IT majors are the prudent choice, instead of looking at mid-cap IT names, because they are largely very volatile, if you see the recent, swings as well. So IT majors like TCS, Infosys, HCL Tech, these are the top 3 names that one can continue to look to accumulate during this dip.
Okay. Now let's talk about stock ideas. Ajit, I'll start with you. Your 2 ideas. Havells and Motherson, you are going with a plain vanilla strategy in both of these, or are you hedging them via use of options as well?
No, Neeraj. So Havells, since it's a low beta counter and post a major consolidation range breakout, we are seeing the stock, inching higher, and of late also we have seen a decent base formation. So the risk to reward is favorable because we have multiple supports around 1950, 1940 area. So even if you go ahead with the naked position, it's okay because we have already seen a decent consolidation and risk to reward is in place. 2100 is what we are eyeing in Havells, and for Motherson Sumi today is a day of a breakout because we have surpassed the recent swing high. So yes, it's a momentum play. So in case if you are risk averse, you may avoid the strategy, but considering that we are seeing fresh momentum in the stock, near-term target 212, 215 is something that is likely in a day or two.
Okay. So, well, that's the strategy. Lower, well, a couple of option strategies as well. Let me try and now take in some queries from our guests, or rather from our viewers to our guests. The first one that is coming in, Ajit, that query is from Suresh. Suresh is holding Indraprastha Gas 565 strike call at a premium of 5.2 rupees. Should he hold or sell?
So Neeraj, yesterday we had a gap up in the stock, and I'm assuming that we bought it in yesterday's trade. But post the gap up, we are not sustaining this gain, and we are gradually drifting lower. So since we are closer to the expiry, monthly expiry, and now it's 4 p.m. Because 565 is the strike. So I feel that he should not wait beyond day or two maximum, and that too he should maintain a stop at 540, because in case if there has to have some buying interest or some recovery happen in the stock, it should happen in a day or two. So otherwise it might fill the entire gap and edge toward 535. So maintain a strict stop at 540 for this position, and not beyond this Friday. So this is something that one should maintain. Upside, I feel that once we sustain above 560, there's a possibility the stock might inch toward 580, 85 area as well.
Okay, so that's the first one. Now, I hope that gives you some insight into that. Kabir from Mumbai has this third query. Kabir is holding SBI September futures at 795. Now, let's bring up the stock price of SBI. Because this Tata Chemicals. Let's get the SBI stock price. It's in or around the current price. What should one do with this one, Ajit?
So Neeraj, the entire PSU pack has been underperforming for quite some time, and the PSU banks are no different. And today, though, we are seeing a bit of a respite in SBI in line with what we are seeing, because the other banks they are doing exceptionally well, but it's just a respite. So I feel that it's an opportunity, to exit this position and switch to the other banking names like ICICI, which is leading from the front within the private banking space, or IndusInd Bank, wherein we are seeing sign of reversal. So he may look to exit at current levels in the SBI and switch to ICICI or IndusInd, any of these.
Okay, well, I hope that advice helps you. Maybe a switch. Also realize that PSUs are doing what they are doing in the recent past, and therefore, while there have been great stories despite Nifty IT doing what it is doing, so quite stunning really what's happening in the markets today. Ajit, before we thank you, very quick answer really. Nifty Bank, now that it's trading the way it is there an intraday trade possible?
So Neeraj, HDFC is definitely outperforming. So there is a possibility that we might make an attempt of Nifty testing 57,800 in the spot basis, and we've almost close to that mark. So the risk reward is not favorable if somebody is looking for any intraday trade. So any dip maybe closer to around 52,500, 550 zone again, then one can look for intraday long with 52,800 being the target zone.
Okay, we'll leave it at that. Both of you, thank you so much for taking the time out and being with us on this leg of the FNO show. Really appreciate your time. Let's talk a bit about commodities as well, very quickly.